What's going on, apes? Welcome back to the channel. Happy New Year's. We have 3 very important things to cover though here in this video, revolving around the 10 worst performing hedge funds in Q3 2021, and they are down massively. Also, I do want to go over something that has been circulating around in the ape community about the Nasdaq buying a stake in the US equity dark pool. And this is actually really old news, as well as this article that is basically saying that studios, movie producing studios, are pushing the theatrical releases in 2022. This is furthermore justifying the fundamental case for AMC heading into 2022. So let's not waste any time getting into it. Your guys' time is valuable just like mine. So hit that like button for me, consider subscribing to the channel, and let me know if you guys like these shorter, sweet, and straight to the point videos in the comment section. But before we get into all this sweet apish information, if you guys want access to all of my trades in real time, the link for that is in the pinned comment down below. The link for the buy and sell alerts. We have been killing it over there. As well as that, check out the links in the description of this video to support the channel, as well as get free stock in Mumu, Public, and Webull. So let's dive straight into it. First off, with the 10 worst performing hedge funds in Q3 2020. After a robust performance in the first 2 quarters this year, the hedge fund industry was relatively slower in Q3. Several factors, including rising inflation, supply issues in most industries, and the European energy crisis, created an unfavorable atmosphere for investments. Let's take a look at the 10 worst performing hedge funds in Q3 2021. We got Centerbridge Partners down 28.5%, Kylan Management down 29.2%, Wildcat Capital Management down 30%, Tang Capital Management down 30%, Green Oaks Capital down 33.6%, Green Spring Associates down 33.9%, Long Corridor Asset Management down 35.2%, Ivy Rock Asset Management down 37.2%, Boyu Capital down 37.2%, Infinity Capital down 38.7%. That is a problem for hedge funds. Now, a lot of people don't fully realize that part of this trade revolves around reducing liquidity hedge funds that have short positions in AMC. To put this into English, if they have less money, then they have less money to service their margin calls once we start to rip, and they will be forced to cover on their short positions. Next up, we have the Nasdaq that buys a stake in the US equity dark pool level ATS, alternative trading service. By acquiring a minority stake in Level ATS, Nasdaq joins a number of distinguished owners, including Bank of America, Citi, and Fidelity. Nasdaq has acquired a significant minority stake in Level ATS, an independently operated U.S. equity dark pool trading venue. Now, this was portrayed on the one hand to be recent news. This came out August 3rd, 2021, so it's not recent or relevant now, in my personal opinion. But the Nasdaq is not actually facilitating these trades. Nothing has changed. They're not stepping in and executing orders. They just bought a stake in the dark pool. That means they get a share of the profit. So I did want to clear that up because I've seen quite a few people talk about it. Old news doesn't mean anything whatsoever. Last but certainly not least, the theater-only shift speaks volumes for box office as studios abandon hybrid streaming model. In 2021, the movie industry deployed multiple experiments to combat the pandemic, primarily through hybrid streaming releases. But it looks like 2022 will be a year of back to basics for studios, even as the Omicron variant rears its head. And essentially what this article does go on to say, just to sum this all up for you, is that Warner Brothers did this first, and then Disney soon followed them with basically doing hybrid releases, sending movies to theaters as well as on streaming platforms. And then Disney reverted back after they were actually sued by what's her name, Scarlett Johansson. After she sued Disney, they reverted back and they have started to do a theatrical release. It says, in quotes, we are seeing the shift back to a strategy of theatrical first for most studios in 2022. That speaks volumes, Sean Robbins, chief analyst at Box Office Pro, told Yahoo Finance. He goes on to say that Warner Bros. Will be back to a 45-day theatrical model for most of its 2022 titles, which effectively makes Matrix the last experiment for now. In quotes, statistically, the most frequent customers are consumers of streaming all frequent moviegoers. The fact that whoever is watching the content wants available, the Box Office Pro analyst noted, saying that there's a future where both box office and streaming can coexist together. So I will link this article down below in the description of this video, as well as the other articles cited here in this video. But that is going to be all. Love and appreciate you guys. Happy New Year's. Catch us on the stream later tonight at about 10 p.m. 10 to 11, 10 to midnight, around that time. Love and appreciate you. Thank you for watching. I'll see you in the next one.